Hello, I'm Jonathan Moyes, Head of Investment Research at Wealth Club, and today I'm with Stuart Veale and Harry Thomas of Beringea to talk about the ProVen VCTs. Harry, Stuart, welcome to the studio.
Good morning.
Thank you for having us.
So we're here to talk about the ProVen VCTs. Firstly, what are they?
Well, the ProVen VCTs are two of the longest standing VCTs in the UK. In fact, they're celebrating their 25th anniversary this year. And they aim to give investors access to a diversified portfolio of exciting, unquoted companies, as well as allowing them to access the attractive tax benefits of investing in a VCT. So we aim to invest in companies which have got proven commercial traction, a strong management team, a good defensive moat, and excellent exit prospects.
And so Beringea, for those who aren't familiar, who's Beringea? And then perhaps we just have a quick intro on your roles. So Harry, your role at Beringea, and Stuart, yourself.
Sure. So Beringea is a specialist venture capital fund manager. It's been providing capital to private companies for over 30 years now. We have a team of 25 people here in London, and we also have an office in the States. And this transatlantic presence gives us a unique advantage compared to other VCT managers. And it puts us in a really good position to help our portfolio companies expand into the US, which has happened on many occasions. I've been with the firm now for over 20 years, most of that time as managing partner. And before that, I was with 3i, which at the time was the largest venture capital company in the UK, and also LDC, which is the venture capital arm of Lloyds Bank.
And Harry, what's your role?
I'm Harry Thomas. I'm partner and head of portfolio at Beringea. As the title suggests, I spend most of my time with portfolio companies, members of the Beringea portfolio, and I'm there to help them to scale and eventually exit. I've been here for over 12 years now. Prior to Beringea, I was briefly on the other side of the table working with startups.
So turning to where the companies invest, are there certain sectors that you look to back in certain stages?
Yeah, we aim to invest in companies which have got proven market traction. So that's the stage that we target. They'll already have a good level of revenues, so we can see how well they're getting on with the customers. And we aim to build a diversified portfolio across a range of sectors, including software, consumer, and tech-enabled services. And to give you a couple of examples of the type of companies that we invested in and some of our larger successes, one is a company called Vinader. It's a jewellery brand. When we invested, it had one shop in the UK and it grew from there to become a major international operation before it was sold. And that delivered a 13 times return on our investment cost. And the other one I'd like to mention is Blis, which is an advertising technology company. Again, grew to be a global business, and we sold that, generating a 7 times return on our investment.
And are there particular stages of company? Is there a particular stage that a company needs to be at for ProVen to be interested? Is there a particular sweet spot for you?
Yeah, we're normally looking for companies that have got revenue of at least £1 million a year. Between £1 and £15 million, that's the sort of sweet spot for us.
And these recent VCT rule changes, which expand the limits, potentially expanding your investable universe, do they help at all? Yeah,
they will help with some of our portfolio companies, because at the moment there's a limit to how much money they can raise, and there are also some other limits, for example, on gross assets. So Pharma-J, for example, is one of our portfolio companies. We will, because of the rule changes, be able to continue to support that company, whereas previously we might not have been able to.
I was going to ask about Pharma-J, so maybe just quickly, because I think anyone who's been to London and sees a queue out the door will probably wonder what is Pharma-J themselves.
Yeah, Pharma-J operates a rapidly expanding chain of quick service restaurants, which provides really tasty, healthy food cooked from scratch from really top quality ingredients. They currently have 17 sites in the UK, and they're looking to increase that number by at least 50% next year. As I mentioned earlier about our US office, we're also supporting Pharma-J to expand into the US, and it's going to open its first US site in Manhattan in January, and it's got a number of other US sites in the pipeline. And when you look at the success that companies like Chipotle and Carver have had in the US to become multi-billion-dollar businesses, the opportunity for Farmer J in the US is huge.
I've never not seen a huge queue at the door of the Farmer J's.
It's interesting. I mean, it's good to have a queue because it suggests that a lot of people want to eat there. But on the other hand, you don't want the queue to be too long because it also drives people away. And the management team is incredibly strong in looking at the metrics of the business. And one of the key things they measure is the number of people that can get through in what they call the golden hour at lunchtime, to make sure that queue keeps moving and people don't get fed up with waiting.
I guess there's a bit of a theme brewing within the ProVen portfolios in that, I guess, premium consumer brands features quite heavily in your successes. Is that something you look at and look to do more of?
Absolutely, and another similar business on the premium end and looking at UK and US expansion is a business called MOTH Drinks. So MOTH Drinks is a manufacturer and distributor of premium RTD or ready-to-drink cocktails. Their focus is very much about high liquid quality, and not only are they winning market share with that product, but also bringing people who wouldn't necessarily have reached for a cocktail in a can previously. It's a business that we first invested in 2023, where we managed to squeeze our way in on an angel round, and then led the Series A in 2024. In terms of reasons why we backed the business originally and why we continue to be excited about that business is firstly, top line growth, business growing 80% annually. As I've mentioned, quality is very much focused there, heads and shoulders above competitors in the market. Our manufacturing and production processes are second to none, which means that we have really good metrics while also delivering high quality product. And finally, and most importantly, a really good management team. Great set of founders and wider exec team, supported by a very experienced advisory board.
And you've both mentioned there the support you provide to the underlying companies. Harry, I guess this is your role.
Absolutely.
What are the key go-tos when you first back a company? Are there certain characteristics of these businesses, and you go and help them with certain topics, or can it be anything?
It'd be very broad. I mean, and no one company is the same, and they'll all have their own challenges, but a lot of those challenges are fairly common and they have those themes. So we look to help businesses from day one. We're looking to prepare the businesses for exit eventually, but that'll be through scaling the business, but also in things around reporting hygiene, about delivering on the strategy, building out a narrative, providing introductions to potential commercial clients, and maybe even potential acquirers at the end. We run a number of programs internally, including the Beringea Scale-Up Academy, which effectively is an ongoing program of events in person and online, where we bring together the portfolio and experts from outside to share, learn about their own experiences, common experiences, and learn from each other. With the benefit of a portfolio of 50 companies here in the UK, they can all learn from each other, and to an extent we can sit back and let them do that, but we're always there to help guide them and move them forward.
And I guess the ultimate goal is exits. Have you had many exits recently that you can talk about?
Yes, we have. So we exited a business called Lupa Foods, which is a Mediterranean food distributor, which was sold in a strategic acquisition to Gaia Food, which is a Nordics food innovation company. It was a good exit for us. We returned 5.2 times our investment to the ProVen VCTs.
We can't talk about exits without also talking about the risks. How do you describe the risks embedded within this VCT?
Yeah, I mean, there clearly are risks in investing in early stage companies, but the great thing about a VCT is that it gives you diversification. So if you invest in the ProVen VCTs, you get immediate access to an established portfolio of over 50 small companies across a range of different sectors and stages, and that gives great diversification, which helps to mitigate the risk. One of the other things we do is that we stay very close to the companies that we invest in. By going on the boards of the companies, it allows us to identify any issues at a very early stage and to work with the management and help them to mitigate those issues. Thirdly, we only invest in companies once they have established product market fit and there's clear commercial revenues. So we have good visibility on how the company is likely to perform, and that also helps to manage the risk of the companies that we invest in.
And if I can throw another one in there, certain extent is about repeating on our earlier successes. So we've recently invested in a business called Andersen EV, formerly known as Evios. This is a business that was founded by a gentleman called David Martell, who has previously founded 2 other businesses, Trafficmaster and Chargemaster, both of which he very successfully exited. One listing on the London Stock Exchange, one was sold to BP in 2018. We backed David and his team at Chargemaster and made a great return on that business. We're very excited, and we got the opportunity to back him again, him and his team, which really reduces the risk in that he's a known entity, we know what he can deliver, and therefore we're able to take advantage of that.
Very interesting. You've done that a few times.
We have, yeah, and he certainly won't be the last entrepreneur we back again and again.
And so I guess summing up everything we've just discussed, for those who want to back a VCT this year, and maybe a few more VCTs given the rule changes, why should they back the ProVen VCTs?
I think, well, firstly, I would say the ProVen VCTs have been managed since their launch 25 years ago, which Stuart mentioned. That means that we have one of the longest and most consistent track records in growth investing here in the UK. The investment team has been working together for decades, backing some of the best and brightest entrepreneurs in the UK. And also, we've got a portfolio of 50 companies. It's a well-established and crucially maturing portfolio, which means we have great expectations for exits in the future. So really, you've got a strong track record, strong management team, and an eye on exits, which is really the same 3 reasons we invest in businesses ourselves.
Very good. Well, Harry, Stuart of Beringea, thank you very much.
Thank you.
Thank you.
If you're watching on YouTube, please press like and subscribe to the channel for more.